value trades, Forex, CFDs, and commodities. If you saw our video on trading triangles and pennants, you noted that we promised to look at trading double tops and double bottoms. Like pennants, double tops and bottoms and head and shoulders patterns represent the battle between buyers and sellers. Before we look at these, we'd like to remind you that CFDs and FX are leveraged products and that your capital is at risk. These products may not be suitable for all investors, and we encourage you to read the risk warning on the Valutrades website. Double tops and bottoms and head and shoulders patterns are reversal patterns and are formed after an extensive move up or down. Understanding support and resistance and trading breakouts are concepts which relate directly to reveal patterns, and we will see why very shortly. There are 4 major patterns that we can look for. Double tops are just that. We have a move to the upside, price hits resistance, it reverses to a short-term level of support, it reverses to previous resistance, reverses again where we wait for a breakout through support. Double bottoms are exactly the inverse of double tops. If we don't get a breakout, we may be looking at a similar pattern, a head and shoulders. These behave in a similar fashion, but they just take a little longer to form and are traded in exactly the same way. Again, with extensive movements to the downside, we can see an inverse head and shoulders. Let's take a look at some practical examples. Here on this 1-hour chart on gold, we can see 3 examples of double tops and double bottoms. In this case, a geopolitical event caused the price of gold to rise quite quickly. When the price was in this range, it consolidated where we could draw a line of support. This is why we must treat the trading of double tops and bottoms as a breakout trade. We don't want to enter until price penetrates support, or the neckline as we call it. We can also see 2 clear attempts that buyers made to increase the price. This is why we call it a double top. If we zoom out to the 15-minute chart, we can get a better look at what happened. We note that price action returned to previous levels and that the neckline does not necessarily need to be horizontal. In this case, price broke through support and spent almost 2 hours falling to previous levels. If we look back a couple of days, we can see that a classic double bottom formed. Price had dropped dramatically for a few hours, including a rare midday gap. Once price broke through this neckline or line of resistance, it returned quite quickly to previous levels. Looking at this hourly chart on pound dollar, we can see that price had been trending up for a few days and that a double top had formed with the right top lower than the left top. As a reversal trade, we're going against the trend, so we have to be very careful here. If we look for a breakout below the neckline and the upward trend line, we can see that we could have made about 50 pips. However, the sterling bulls won and price continued to rise until we achieved consolidation here in this head and shoulders pattern. A break through this neckline proved to be a serious reversal as price plummeted and trended down for 12 days. However, beware. We had a false breakout here, and if you had entered the trade at the break, the placement of your stop loss would have determined the success or failure of your position. That's all for now. Happy trading with Value Trades, and we will be back with more soon.